Welcome back to the show. Today we are diving into everyone's favorite dinner table argument, the housing market, specifically how Q3 of 2025 is shaping up.
Oh boy. Let me guess, it's expensive, it's frustrating, and I still can't buy a private island.
You nailed it. But there is a tiny glimmer of hope. According to Oxford Economics, affordability actually improved slightly in late 2025.
Okay, I hear a but coming.
Huge, but it's still dramatically worse than pre-pandemic levels. We are talking about a totally different world compared to 5 years ago.
So let's talk numbers. What does it take to get keys in hand right now?
Brace yourself. To afford a single-family home, including taxes and insurance, you need to earn $110,100 a year.
Ouch. And that's actually down a little from the peak earlier this year, right?
It is about 2% lower. But here's the kicker. Only 38% of American households actually make that much money. Back in 2020, 57% of households could afford to buy. That is a massive drop in purchasing power.
I assume the usual suspects are dragging those numbers down. California?
You know it. San Jose, San Francisco, LA, San Diego, and throw Honolulu in there too. In those cities, at most, 17% of households can afford typical housing costs.
17%? That is wild. It used to be up to a third of people in those areas just 5 years ago.
Exactly. It's becoming an exclusive club.
But here's what surprised me in the report. It's not just the big coastal cities getting harder to afford. The sharpest drops in affordability are actually in the Sun Belt and the Midwest.
Right. Places like Port St. Lucie and Ocala in Florida or Green Bay, Wisconsin, affordability is tanking there.
It's interesting because San Francisco didn't drop as much, simply because it was already astronomical. These other places are playing catch-up in the worst way possible.
Okay, we need some good news. Is there anywhere a normal person can actually buy a house?
Yes. Pack your bags for the Rust Belt in the Midwest. Pittsburgh, Cleveland, Oklahoma City, Louisville.
I hear Pittsburgh is lovely this time of year.
It might be. In those cities, close to half of households can still afford the median home. And if you go to places like Toledo or Erie, Pennsylvania, it's over 50%. So the dream is alive. You just have to move.
So why is the squeeze so tight right now? Is it just home prices?
It's the double whammy. Mortgage rates are still the biggest obstacle. In the early years of a loan, you're mostly paying interest, not principal.
And don't forget insurance. The report specifically mentioned premiums skyrocketing in Florida, North Carolina, and South Dakota.
Yeah, that monthly payment isn't just the bank loan anymore. It's the insurance company wanting their cut too.
Bankrate did their own analysis on this, and it really paints a bleak picture for the average earner.
Yeah, the median U.S. income is about $80,000. Bankrate found that if you make that, you are priced out of 75% of all homes for sale nationwide.
3/4 of the market is just off limits. To afford the median priced home of $435,000, you need to make $113,000.
And if you live in Seattle or New York, you need over $200K. It's brutal out there.
There was this quote in the article from a loan officer in Charlotte, Julia Shears, that really stuck with me.
Oh, I saw that. She said if you told her a few years ago she'd spend $500,000 on a house, she'd think you were crazy.
Right, but now she's like, oh, that's not bad. That's a good price.
It's scary how quickly our baseline for expensive shifts. We're normalizing $500,000 starter homes.
The inventory situation is just as polarized. Bankrate looked at active listings. In Miami, LA, and San Diego, fewer than 1 in 50 listings is affordable for a typical local.
1 in 50? That is basically a needle in a haystack.
Meanwhile, you look at Detroit, St. Louis, or Cincinnati, and 50% of listings are within reach.
It really is a tale of two markets right now. Crisis levels in some spots and opportunity in others.
So what's the verdict? Are we going to see a crash or a sudden fix?
Experts say, don't hold your breath. Hannah Jones from Realtor.com put it best. The market isn't calibrated to local incomes right now.
And she said relief will be like slowly easing out rather than flipping a switch.
So patience is key, and maybe looking at Zillow listings in Pittsburgh. Thanks for listening, everyone.
Catch you next time.